Happy New Year 2017. Hope you had a great little time off if you had some. If not, hope you worked hard, because this guy works hard for sure. Brandon Hafley from Catalyst Mortgage. Hi, I'm Amy Lewis from the KFBK Morning News. You know that we have been trying to do our best, at least Brandon has been, to educate us all about the better way to handle our finances and the better way to refinance or to buy a home. Here's an interesting thing that I just learned from Brandon, as a matter of fact. So it's a new year. And soon, sadly, we'll all be paying our taxes. Thank you, Uncle Sam. We always want to pay the least amount of taxes, right? And that kind of means taking every deduction possible. However, if you're looking to buy a new home or refinance your home mortgage, there's a better way to go about doing this. And Brandon was just telling me about some of the mistakes people tend to make when they're looking at their taxes and thinking about buying a home or refinancing. So what's going on?
Well, you know, Amy, it comes down to the pre-approval process. When you're looking to purchase, if you are self-employed or you have a partnership or ownership stake in a business, even if you have a different job, to work with your loan officer up front before you file your taxes this year to make sure you're not going to write too much off that could actually make you not qualify.
Okay, stop right there. So we always want to write as much off as we possibly can.
Absolutely.
But so how would that affect what we want to do in the future for a home or refinance?
Well, it really depends on how your business is structured. If you're a C Corp or an S Corp, but write-offs will go against your overall earnings, and everything on S Corp flows through to you as an individual. C Corp, you still get W-2 and so on, but your business taxes can affect your personal income. So when you're trying to get pre-approved, some people will say, hey, I need to write everything I can off to save as much money and lower my tax, my tax amount that I have to pay. But by doing so, you can actually negatively impact you qualifying and also prevent you from qualifying at all. So I always tell people up front, talk to your loan officer and really get those things started to work out now, because you might not file till April, but getting it down, figured out now on what you're going to qualify for then is really important.
So if I make a lot of money and I make a lot of deductions, that could actually work against me.
It can. And what you want to do is work with your loan officer and say, okay, hey, look, I'm looking to purchase. Have them review, your 2015 tax returns and see where you qualify. And one thing to keep in mind, sometimes businesses do we have a loss. Maybe for 2015 was a bad year for you as a business owner. But if your 2016 income on your returns looks good, we can actually base it just off of that year. Freddie Mac, for instance, allows for 1-year tax returns if the system approves, so you just base off that. But again, you still want to make sure you're not writing too much off even for that year to prevent you from qualifying.
And this is exactly why we have him doing this instead of us trying to do it on our own, right? I mean, it really is, and not to toot your own horn, but it really is advantageous to have somebody who knows what they're doing to kind of keep you in line. And I think it's invaluable information too, because sometimes something happens that you don't know could actually work against you, right? So let me ask you this. If I am self-employed and I have a number of side jobs, does that affect perhaps getting a loan?
It definitely could.
How?
For instance, if you are, let's say you have 2 jobs. Well, both jobs you have to have had for 2 years to count both income. Now, if you're a business owner and you do various jobs, well, then you're fine, because that's one entity is the business. But keep in mind, some people will work 2 or 3 jobs. Your primary job, you can totally use the income, that's fine. But trying to use your second job or potentially a third job, you have to have a 2-year history of continuance to actually then be able to count that income in qualifying. So again, it goes into what we always say. Even if you plan on purchasing in 6 months, a year, 2 years, or refinancing, get qualified up front so you have a plan. Start your plan now on saying, okay, hey, this summer I want to purchase a home. Okay, where do we stand financially now?
But what if I want to buy a home January 2017, but I think, given all this information, do I have to actually wait until I file my taxes to do this?
That's a great question. You can actually go ahead and purchase now based off of 2015 and 2014's numbers.
Okay.
If you're self-employed, you can actually base it off of those. You don't have to do it based off of 2016. So if you want to purchase today or next month, you're totally fine. It's later on this year, if you still want to purchase, and let's say you're self-employed or whatever, you're going to really need to make sure things are set up the right way, that it's not going to go against you and negatively affect your qualifications.
So there's a lot of useful
Lot of
information.
information.
Well, you know what though,
Absolutely.
it really is useful
Right.
information, and it is a lot of information. But you know what you have? You have rewind, so you can actually go back and listen to this again to make sure you know exactly what you're talking about. And for more information, go to catalystmortgage.com. And of course, from 7 to 8 on Monday mornings at KFBK, we have the Catalyst Report. So we've got you covered. Thanks, Brandon.
Thanks, Amy.